Hello and welcome to Commodity Champions. I'm Manisha Gupta, and this week has been quite a buzzing one where we have seen the gold prices steady, see some buying on the lower sides, but more importantly, we have seen some policy shifts finally happening for gold in the industry. Hallmarking, which has been a talking subject since 2000, finally saw a notification coming in where the hallmarking for gold jewellery would now be made mandatory from 15th of Jan 2021. We of course have moves also coming in for good delivery standards in India. The first step towards that also has been taken. What does that mean for the industry and where are we headed from here on? To join us to talk about that, we are now joined by Mr. Ananta Padmanabhan, who is Chairman GJC, also Chirag Sheth from Metal Focus. Gentlemen, hi, thank you so much for joining us. Chirag, to you first, and what is the sense that the markets are making of this? This has been incoming, it's not a surprise, but what are the numbers telling you?
I think, it's a kind of step in the right direction. Hallmarking has been introduced in our country for decades now. First step towards compulsory hallmarking is now in place. Government also notified, standards for good delivery. I think that is something which is very, very good. It paves way for a lot of things. It paves way for bullion banking in India. It paves way for spot exchange, something that we've been working on. And I think the government has, probably done a lot of groundwork along with various associations, World Gold Council, to probably come out with these standards. So I would say it's a step in the right direction, paving for a lot of regulation in India. I think the industry was looking out for things like this, but we are aware that on the hallmarking side there are some issues which are there. I think the Indian good delivery standard is much more easier task at hand.
I will come to that, but let's talk about hallmarking first. And Ananta, what is your initial response to this as well? I do understand that caratage as of now is a bit of a problem because jewelers are holding stocks which are not of the category that hallmarking tells you. And the other is the whole converting your stock or selling your stock. How much of a bigger problem is that? Or would you say that in sense of the larger interest, this is something that the jewelers perhaps can take care of?
See, we at GJC, we have been welcoming the mandatory hallmarking, but we have been asking for infrastructure across the country. See, without the hallmarking centers, it will become very difficult for the jewelers from travel from districts to the towns, the security hazards. But otherwise, it's a very good move by the government. And they have given us a year's time. A 1 year time has been given. So whatever under caratage we have, we can convert it to 14 carat, 18 carat and 22 carat. And my only advice to all the jewelers is, start from today, as and when you sell your under caratage, replace it with hallmark jewelry so that on the day of mandatory hallmarking from Jan 15th, your full stock will be hallmark jewelry. Otherwise, in December, you have to melt your under caratage, wherein a lot of loss will be there. So that will be a better way for them to go forward. But at the same time, we will also be sitting with the government for including 20 carat, 22, 23 carat and 24 carat, where there is a lot of demand. 20 carat demand is there in UP, Bihar, and Rajasthan, whereas 23 carat jewelry, even today they are selling in Maharashtra, and 24 carat everywhere today it's fashion because it is sold in Bangkok, China, everywhere. People love the color of the jewelry. So these also has to be included in that.
Sure. And I'm assuming 1 year is a time that has been given out. So clearly some more conversations could be happening on that. But my point also is on the number of it, because the number that I'm working with right now is 2017-18, which says that 4.25 crore pieces were hallmarked in that year. And that really comprises of 40 to 45% of the total jewelry. Has that number improved in the last year? I mean, do you guys have any numbers to work with?
I think, that is on an uptrend for sure. If you look at probably what was the case 5 years ago, we've seen a significant amount of, increase in the hallmark jewelry and the demand for hallmark jewelry. As education, kind of increases, that will also, happen. Having said that, I think what is really happening is the awareness in smaller towns. I think that probably needs to, probably increase for consumers to be much more aware about hallmark jewelry. If that happens, then we'll see the percentage of which has been 40 to 60%, then move up much higher in that sense.
Moving on, and while much is done outside the budget itself, Ananta, is there an ask from the industry, from within the budget, from the finance minister?
Every time we have been meeting her, last 4 months we have met her twice, and we have been requesting for the same. Reduce the customs duty from 12.5% to 6%, and GMS appoint jewelers as the agents for collecting the gold from the consumers. So this demand has been there, and we have done this a few years back itself. On GMS, we have given a plan how to go about. Only thing, they need to look into it. They're held up with other issues, so they're not looking into it, and we are very positive that this time they will do it. See, even if otherwise they are not able to bring it down to 6%, they can first bring it to 10%, and then I've been asking for a steering committee to be formed where the industry can sit with the officials, and then we can take it to the finance minister where she can look into what has to be done. So that demand is there from our side.
Clearly. And good delivery is one thing that we clearly have to talk about, because some of the policies, some of the reforms that we have been discussing for 4 to 5 years now finally seem to be taking that direction, shape and form. So the good delivery, the notification of course has come in, but for the derivative exchanges to take it in, SEBI will have to work on it. We perhaps need a gold regulator, another ask from the industry. Where are we on all of that?
I think those things are going to take time. Look, in India, we've got, with the peculiar thing about gold is there are so many regulators involved. You got the finance ministry, the commerce ministry, RBI, SEBI. So obviously to get all these stakeholders on board is going to take, some time. Having said that, I think, look, this is a very, very good step, something that we've waited for many years. The first notification is out. Even BIS also talks about having an independent auditor and, kind of regulator. So I would say the next step would be to find a gold board, something that government has already, kind of sounded off. And I think that would be the first step towards, then bullion banking coming in, then spot exchange coming in. The first step has been done. Now we need to take the further, steps.
And that really brings me to the demand part of it. And last year wasn't so great, but as you were telling us, Chirag, before we started the show, that the numbers that you're working with are, decent. 800 tons plus is what we are working with for the previous year? Yeah,
800 tons is what the import looks like. If you compare it to last year, it's down 10%. I think in that sense, you will have to break imports into two halves. The first half was very, very strong, and then we, saw a sharp dip in, imports. However, things have started to pick up. I cannot get into specific demand numbers. The sense that we're getting is that things have improved drastically compared to Q3. It would be now visible how things actually move into 2020. I think the price is not a big issue. The Indian consumers are getting adjusted to the high price. It will have to be seen how the rural economy improves and how the liquidity kind of eases. If that happens, then we'll see a, kind of improvement in demand in 2020.
And Ananta, while of course import is one part of it, the other part clearly is demand and how the jewelry sector as an industry has performed in the previous year. How would you summarize that, and what are you looking forward to now for 2020?
See, last year, as Chirag mentioned, the first 6 months was very good, and the next 6 months was a big flop. So this year, right from January, things are improving a little bit, but price has to support. We are looking forward for the US-China deal. If it goes through, prices may soften a little bit. Maybe 3-4% also will make a big difference for the consumers. And the budget also has to support the rupee. If the rupee appreciates by another 2-3%, overall we'll get a benefit of 6%. So February onwards, business has to pick up. We are very positive.
So how are you looking at the quarter-on-quarter demand now, Ananta? Because this is a quarter when you see the wedding demand supporting.
Yes.
Next quarter would also be about Akshaya Tritiya. You have Gudi Padwa. At least Maharashtra looks at all of these, and the rest of the country also does. So are you again dividing this year into half or quarter-wise? What is your sense on where the demand could be headed?
No, I would prefer the full year to have a very good demand for the industry to come out of all the problems that we have been facing for the last 6 months. We hope it will be very good this year, because government, especially the Prime Minister, is looking into the budget preparations and meeting all the industrialists. Hope everything will go well.
So when you are making these presentations to the government, to the finance minister, Ananta, what is the number that you're working with in sense of the unofficial gold coming into the country? Because even as we are looking at 800 tons of official gold, what has been the number that you have been able to pull out?
See, 2018, the figures that we got from Chirag and World Gold Council is around 110 tons. I hope I'm right. 110 tons. So last year, it must have gone up by another 10 to 15% from July onwards.
Okay.
So if this continues, there will be another jump of 10 10 to 15%. So what we feel is it's a huge money that is going into the wrong hands, which is giving more work to the Home Ministry. So that is why I've also approached the Home Ministry, because they should also realize that because of this high imports, a lot of smuggling is happening and the money is going into the wrong hands, which is keeping the Home Ministry very, very busy always. So they have to stop this. To stop this, the customs duty has to come down.
Well, okay, so there are a couple of positives like hallmarking and the good delivery standards, and the imports have been all right. But in this year, there's a lot of work that the government and the industry perhaps will need to do if we are looking at better policy, better reforms, good demand, and better strategies going forward for the industry. Chirag, Ananta, thank you so much for coming by and giving us a sense on where the gold industry is headed. With that, we'll go for a short break. But when we come back, we'll talk about the sugar industry, because that is where a lot of action also is. We are looking at the global prices at around 2-year highs. What has led to that? How is the industry looking forward to the budget? All of that in a minute. Back, and we're talking about sugar prices now. In the global markets, they are trading at a 20-month highs. We haven't seen 14.5 cents in the ICE raw sugar prices for that longer time. The support comes in from the fact that Brazil is shifting a lot of cane to ethanol instead of sugar. And the other trigger has been that Thailand, which is the 4th largest producer of sugar, is looking at a lower crop for 2019-20 because of adverse weather. So the fund buying has been quite strong, and that has been pushing the sugar prices higher. In the Indian markets, in the meanwhile, we also are looking at ethanol investment on the higher side. It has been about lots of policies from the government, which has been supportive for the sugar as an industry. And when you look at the last 9 months of a data, the average sugar prices stand at 32.5 to 33 rupees per kg. The government's standard or the minimum sugar selling price is fixed at 31 rupees per kg. So we clearly have been holding above that. And the industry anticipates that 2.8 million tons has already been contracted for exports, and we perhaps could be looking at that number improving quite a bit. Joining us now are two very special guests, Somnath Chatterjee from ITC and Robin Shaw from Marex Spectrum. Gentlemen, hi. Thank you so much for joining us. Somnath, to you first. And while we did see the sugar as a sector, depressed for the last couple of years, but 2019 has closed on a positive note. We've seen the sugar index gain up. The FAO shows us that the sugar prices gained up by 5.5% in 2019. What is your sense on the prices going forward? Do you see further gains? Because we almost are looking at a very weak surplus, almost a deficit as per the international markets. So what is the sense on prices, first of all?
For commodities such as wheat and sugar. Now, in both of these commodities, it's very interesting that we've seen a global and a glut in India as well. Last year was a record production of wheat. At almost, the government numbers indicate that we produced about 99 million tons. Private trade estimates we produced about 92 to 93 million tons. Whatever the real number be, it was a large crop. And the Food Corporation of India is today carrying record inventory of wheat. However, we are looking at another bumper crop in March, April 2020, and that is likely to be about 11% higher than last year's crop. So we are looking at anything between a ballpark of 105 to 110 million tons. Despite such large crops and so much of a glut in wheat, we've seen that the government has held on to the selling prices of wheat. Similarly, similar is the case for sugar. Despite having a large carry forward crop, and despite seeing that the demand for sugar within the country has not been growing very sharply, the prices of sugar have been on the rise of late, because on the back of the MSP, minimum selling price, and now some excitement which is coming from the export market. So I think sugar across the country is selling comfortably above that 31 rupee minimum selling price, and a lot of my colleagues within the industry are of the view that we may see a little more bullishness going forward.
Somnath, also, what is your sense on the consumption demand and growth? Because as per the latest data, it shows that from India's consumption growth of 4.1% perhaps in 12-13, we've come down to nearly 1.9% in 2019. And the expectation is that we could be looking at a negative consumption growth going forward from here. How are you reading these numbers?
Manisha, a phenomena called stagflation comes to mind, and that's something which is worrisome. Stagflation is a scenario when there is input price inflation, but demand side there is not much demand going forward, and we need to do whatever it takes to revitalize rural demand, because that's where we see the real slowdown coming in. And if we want to get out of this, the morass of the current slowdown, the resurgence has to be from the rural areas. We are all looking forward with a lot of expectations to the ensuing budget. We hope that there will be certain policies which will spur demand and get it all going, because I think in most industries, including ours, the capacity utilization has now been coming down over the last successive 3 quarters, and that is something which needs to reverse.
So, Somnath, how would you look at the budget expectations now? Because the markets really seem to be relying a lot on the rural demand going forward. That really seems to be the number to watch out for. How are you, one, looking at that demand? And are you expecting anything from the budget, from the industry?
We are so connected to rural as a company because most of the commodities that we deal in or are trading in are connected to the rural part of India. And we feel that relief has to be given there first. So if that is by way of direct transfer benefit, for instance, they could make a beginning in 2020 procurement campaign of wheat. They could start by doing a direct benefit transfer, or they could start with a scheme like Bhavantar, where the farmer sells the produce at whatever price at a registered mandi or online, and the difference between the selling price and the declared MSP is then transferred directly into his account. This cuts out the middleman, this cuts out the corruption in the system, and the money reaches the farmer directly. Also, this does not burden the already overburdened Food Corporation of India.
That brings me to you, Robin. And since you are in India and you've been talking to a lot of people as well, how do you read into India's export and ethanol policy, the subsidies that have been given by the government and the ethanol pricing itself? How beneficial do you see that working for the industry?
Well, it's very good for India. I think the policy is intelligent, it's been carefully worked out, and it's working. The problem is that all that India is doing is shoveling its own surplus onto the world market, with obvious consequences of pushing that market down.
Sure. So, Robin, the other thing really is about the global deficit or not. I mean, that really has been a question mark. Before, when we started the previous season, the markets were almost sure of looking at a sugar deficit, but that it doesn't seem to be the case right now. How are you looking at the global numbers?
Well, the world sugar market suffers from chronic oversupply for the simple reason that every single producer in the world, with one exception, receives direct or indirect subsidies from their government. Why do governments love sugar? I think mainly because sugar brings industry into the countryside, and it has a huge economic benefit, creating indirect jobs. So governments love it, and the result is that there are no farmers in the world that receive the actual cane price derived from the real price, the international trading price, our market. And as a result, we're in oversupply, and we can that oversupply, that surplus, is exacerbated by the 4.5–5 million tons that we all expect to come out of India this year and for the future.
Also, almost everybody seems to be talking about Indian sugar exports. But when you look at the overall global trade numbers, the Indian sugar exports at around 4 to 5 million tons is really small. What is your sense on how much is that impacting the overall global trade and the prices?
Well, I would say that very roughly by coincidence, if 5 million tons could be removed from the world market, that would enable international prices to escape from what we call the ethanol trap. Brazil, as you know, can produce an extra 12 million tons if instead of making minimum sugar, they made maximum sugar. We are currently expecting 3 or 4 million tons of that additional 12 million to be needed. But that still leaves something like 8 million tons surplus. If that 8 million ton surplus could be reduced to, say, 3 million tons by India ceasing to export, then suddenly the world market would be able to escape from the gravitational pull of the ethanol price and fly with its own wings and fly up to a price that gets closer to cost of production.
I just want to keep coming back to the ethanol story because India's dependence on crude is now 84.5% as per the latest numbers, and biofuel, renewables, ethanol really are the buzzing words. Going forward, this one is of course an excess year and we are looking at higher sugar production. But going forward, do you see this policy intact, especially in the years when the cane production is not so much?
Well, it's a good policy. It's desirable by the sugar industry as a whole in the world, precisely because it would divert a large amount of cane to ethanol. As to whether it will work, I hate to spoil a good story, but I think it's clear to most people that ethanol, biofuels are not necessarily as likely to work as as seemed to be the case a few years ago. The probability of ethanol, of electric cars, hydrogen, solar, wind, all of these are kind of putting ethanol on the back burner. It's worked in Brazil, but it works purely because the Brazilian government sacrifices 12 or 13% of tax on ethanol compared with gasoline. Will it work in India? Yes, I think it will. And so I welcome it. But I have to admit that the fashion has moved on. And actually somebody in the Commission in Europe we were talking to about precisely this, he said, frankly, we've moved away from biofuels. We've moved on to solar, wind, and all kinds of alternatives.
The other thing is we keep talking about India following the Brazil model. You are in India. Brazil has this thing about switching easily between sugar and ethanol, looking at where the profitability is. What is your sense on whether or not India can do it, should do it?
Well, you're quite right to say that I sincerely don't want to come across as being anti-ethanol. I think ethanol is an extremely, is the best solution to the world's sugar surplus. And it has definitely worked in Brazil. It's worked because the government made it work. And it seems to me very clear that in India, the government intends to make it work. So yes, I believe it will work.
Robin, my final question to you is about the global demand supply numbers. What are you working with right now? Are we looking at a surplus? And what is the way forward from here?
Well, in the presentation I made this morning, I said that we're not in a deficit. We're actually in a surplus. Well, we're in that midpoint where we are using up, we need a small amount of the 12 million tons of extra sugar that Brazil would produce if the price of sugar in 2020 is consistently higher than the ethanol parity. Let's say that extra sugar totals 12 million tons. I think we need 3 million tons of that. And therefore, you can either say we're in a 3 million ton deficit, or you can say that we're in a 9 million ton surplus. And therefore, the price of sugar is tied to the price of ethanol. The price of ethanol is tied to the price of gasoline. Gasoline is tied to crude oil. And I have no idea where crude oil is going to go.
All right, so that is the view coming in from the sugar as an industry. Looks positive right now. The government policies have been positive. The global sugar price is running up, so the Indian exports look pretty good. So everything as of now seems quite positive for the industry. The worst is behind us, is what the markets really think. Robin, Somnath, thank you so much for joining us. And with that, that's all the time that we have in Commodity Champions. Thank you for watching.